Hi, my name's Jack Rose. I am a Strategic Sales Director at Triple Point Investment Management. I've been here coming on for 2 years. Primarily my role is to help develop and build out the sales and distribution strategy for our retail products at Triple Point. I've worked in the industry for probably about 10 years now. Previously worked at a fund distribution house focused on tax efficient investments and worked with 4 or 5 market leading VCTs in particular. So a VCT in its very simplest form is a company that's listed on the London Stock Exchange that invests into younger, smaller, exciting growing businesses. It's based around some rules that were set up by the government in the 1990s, really designed to help support young, dynamic small businesses get the capital they needed to grow and become the businesses of tomorrow. The managers that run these venture capital trusts, these VCTs, are beholden to rules in terms of what they can invest into, so what type of companies, the age, the size of them, and the actual running of the fund itself. And in return of that, investors in the fund get some really attractive tax breaks, which make it an exciting and interesting investment. Some of the tax breaks that investors will benefit from are you get upfront income tax relief to the tune of 30%. You also benefit from tax-free income by way of dividends, and also any capital appreciation is free from any capital gains. In return, investors have to hold their shares for a fixed period of time, a minimum of 5 years. Well, I think one of the biggest reasons to consider investing in a VCT is getting access to some of the most exciting and young businesses of today that are going to become the household names of tomorrow. It's really an opportunity to support young, dynamic businesses that become the cornerstone of the UK economy, become the names of tomorrow, as I mentioned. And often I think people associate investing into a VCT with just looking at very small companies, which is absolutely the case when they are first invested into. But those companies grow and become these massive contributors to our economy, supporters to growth, employment in the UK. So you can look at companies like Zoopla, Five Guys, Gusto. Those are companies that lots of people would recognize today, especially post-COVID. So investing in the companies of tomorrow via VCT is a really exciting area for people to get access and exposure to, and I think it can become a really important component of people's portfolios. I think lots of people these days are really socially conscious with regards to their investments. They want to feel like they're doing something that's meaningful with regards to their money, and I think there is, I'm not going to say no better use of your money, but certainly the idea of being able to support young, dynamic, growing businesses supporting the UK economy. The TP Venture Fund is a share class of an established and mature VCT that we have here at Triple Point. We're looking to invest into a portfolio of young, dynamic, exciting businesses. What does the Venture Fund deliver for investors? So the Venture Fund is looking to align not just long-term, attractive, tax-free income, which is a mainstay for many VCTs, but it's looking to align that to long-term capital growth as well for our investors by investing into a portfolio of young, small, dynamic businesses. The Venture Fund has a unique investment strategy that we call our challenge-led investment philosophy. What that means in essence is we are looking to find young businesses that are looking to solve the corporate challenges of larger, more established businesses that have got pain points that they're looking to fix. The reason we think that a challenge-led philosophy is really unique and different is that the number one cause of company failure in young businesses is that they don't have an established market demand for their proposition. By focusing in on the challenges that larger corporates face and having a defined proposition to solve that, we're looking and seeking to address that challenge that young businesses have and address that failure. Where our VCT stands out and is slightly different from a lot of our peer group is the B2B focus is certainly something that marks us out as being very distinct. It is a rigorous focus of ours. We're not consumer-led in what we do. We want to focus on business-to-business companies that do have some form of technology underpinning them and are looking to solve a corporate challenge. Those are the kind of things that make us different in terms of our investment philosophy. Another area that marks us out as being slightly different from our peer group is where we look to invest. We want to invest at an earlier stage to many of our peer group. We think that there's a lot more attractive valuations by just investing at a slightly earlier stage in a company's life cycle. So we're typically looking to invest pre-Series A, somewhere in and around the seed stage. At this point, we feel like we're getting in at a much better valuation, which ultimately means we can deliver a better return for our investors because we can capture a much more attractive valuation and ride that growth journey. The venture fund is in its earlier stages of investing. I think we're into our third year now of investing, and actually over the last 12 months have had a really, really exciting year. COVID has actually been kind of the making of the fund in many respects. You know, the environment and the ecosystem that's created has given us a really unique opportunity to help to support businesses through what has been quite a challenging time. Our investment strategy is really well placed to take advantage of some of those market movements, often when you have a period of severe market disruption, and the kind of the fabric phrase in a period of market distress become these opportunities where you can find really outstanding businesses that are taking advantage of these moments and really pivoting and generating really exciting opportunities for growth in their expansion, but also for our investors. And I think what we want to continue to be able to do is to support these businesses as the country bounces back and we build back better going forward. The venture fund is, in comparison to the market, at a relatively early stage of its development and growth. I think actually one of its real selling points is that it isn't a mature VCT. You know, we still have a lot of growth left in us as a VCT itself. But I think the making of this VCT really was the last 12 months and the COVID era. We have been able to support businesses as we've had this period of serious market disruption. Lots of younger businesses, we've been able to continue to support them as they've seized opportunity and pivoted into new markets. And I think we want to be able to continue to do that over the next 12 months as the country builds back better. Yeah, I think Triple Point, we really pride ourselves on offering a really outstanding level of client servicing, and we really want to be available at any point in time to be able to help investors, whether it is the first time that you're looking at a VCT or you're a seasoned investor. We want to have a team, whether it's in the office or in the field, that are able to help you with your queries with regards to our products, or whether it's a more general query to the market.